Hi, this is Jay Hummel. Welcome to the deep dive in collaboration with Investopedia. I love hosting the show. I always have great guests, but it's very rare that I have personal friends on, and couldn't be happier today to have Cory Sims. Cory and I worked together in the industry a long time ago. I'm the old guy on this. He's a lot younger than I am, but we were fraternity brothers at the University of Cincinnati, and I couldn't be prouder of the firm that he's created and the advisor that he is in the industry today. And Cory, I just can't thank you enough for being a part of the show.
Yeah, Jay, I'm happy to be here. Excited to talk shop a little bit.
Yeah, just tell the viewers a little bit about you and what you're doing at your firm.
Yeah, so we are an RIA in Cincinnati. I went out on my own in 2012 and ultimately started Sims Investment Management in 2013. We manage right now, around 250 million in AUM, although that's taken a little bit of a hit this past week. I've got myself and three other advisors, soon to be four, under me and three other support staff. So, and then we've got another junior advisor who's going to start with us. We'll be a team of 9 by the summer. And we help businesses, individuals, families, do financial planning.
Yeah, one of the things I wanted to talk to you about, because you've always been really focused on, from the time that we worked together, on market volatility. How do you handle helping a client think about the world that we live in today and will continue to live in, where markets bounce around? How do you think about market volatility, and how do you help clients deal with it?
Yeah, I think, this might be a recurring theme today, but when you think about the industry overall, I think we do our clients a disservice because we try and protect them from themselves rather than taking the time to actually teach and educate our clients of why we're going to do what we're going to do and why it's in their best interest. So I think first and foremost with volatility, we historically have been more of an equity shop than a fixed income shop because a large part of my career was spent with 0% interest rates. And I knew there was going to come a day when interest rates are going to have to go up, and I knew that was going to be incredibly painful, like we saw in 2022. So, I couldn't accept that we were going to sit there and put clients in, 30-40% fixed income at 0% when inflation was 2 and our fee was 1. So they're essentially locking in a negative 3% real return. And so instead, I took the time to explain to them, hey, we're going to have the volatility, and this is what the market's going to do, but let's really focus on your financial plan. Let's focus on what you need in short-term assets, mid-term assets, and long-term assets. And when interest rates went up, then we were able to pour into fixed income a little bit more. So I think it comes down to, really teaching the client rather than following model portfolio theory and some of the things that we, do as an industry.
Well, one of our guests a few weeks ago is a pretty big name in the industry in an option trading side, and I know you've done a decent amount in the option side.
Yeah.
How are you thinking about using options to help clients think about volatility?
Yeah. So I have never thought of myself as a trendsetter in any definition of the word. But starting in 2012, again, when interest rates were low, and even back before that, when I was at a larger firm, we have a lot of legacy assets here in Cincinnati, right? You've got Procter, General Electric, Kroger, et cetera. It's like, well, if you have these assets and you have a client that might be hesitant to diversify out of some of them, and it's a large portfolio concentration risk, why not write some covered calls on them? Why not go out a couple years even and find a price that they're willing to exit some of their position and generate some income for them, some additional income. And if they get called away, it was great because it was forcing their hand to actually sell some shares. But as well as I do, if a client's like, oh, this stock's trading at 125, what's the price that you'd like to sell it at? Oh, I think I'd sell some at, 150. Well, then it gets to 150 and they say, you know what? No, I want to wait till 175.
175 sounds better.
Yeah, yeah. Well, if you've got that call option sitting out there and you've been able to do that a couple of times, it forces their hand to diversify out of it. And if it never reaches that price, then we've just generated more income. So that's how I started to fall in love with the covered call strategy. And then, it also just happened to be that we were in this 0% interest rate environment. And, I was looking for ways for retired clients to be able to generate more income. And so by teaching them, we're going to increase your volatility a little bit, but we're also going to be able to increase your income. And our retirement income strategy with having a nice little chunk there in covered call funds has worked really well.
That's awesome, man. Well, I'm going to pivot. I don't know if you're still giving this away, and you probably won't remember that you gave this to me, but A Short Guide to a Happy Life is a book that I know you gave me when you started the firm.
Yeah.
And I know you gave to a lot of your clients back then. I don't know if you're still giving this out, but I think it's an amazing book. It's still on my bookshelf. But to me, it kind of just sums up how you view trying to help clients. And you believe it's so much more than just financial planning, right? It's how do you help clients realize that money and wealth is a means to live your life. It's not the end of what you're trying to do. So I've always loved your view on that. I would just love viewers to hear, why did you give this book out or still give it out?
Yeah.
And how do you think about helping clients think about wealth?
So that's great. To be honest, I didn't even remember that I gave you one of those, but we still send that out in our client welcome packet. It's a book that I consider is a good recalibration book. When life's feeling a little bit out of whack, you can read that thing in about 10 or 15 minutes. It's mostly pictures, which is also probably why I liked it. and it just puts things into perspective of, what are the more important things in life. And I think what our team does really, really well is we sit down with the client, and most of them have not actually considered what they're trying to achieve in life, in their career, in their financial world. And so when you ask a client, are you just trying to accumulate a big bucket of money? What for, right? Like, what is the actual purpose that you're driving this towards? And then you can start to get into some deeper conversations. And I think one of the coolest parts of our job is we can have such a ripple effect for our clients. I've talked to my team about this. I haven't figured out a way to track it. But if you think about a married retired couple, right? Let's say they're 70 years old and they've got a couple kids and they've got, grandkids. The financial decisions that we're helping them make they don't just impact those two people, right? It's going to affect their kids. It's going to affect their grandkids. And then hopefully if we've done our job with them, they're actually going to be able to be even better, community members, because they're going to be able to give assets away and maybe make an impact on some of the things that they are passionate about from a charitable giving standpoint. And that's the fun part of this job. When you can get to that level of a relationship with your clients, that's where you truly feel like you're making a difference. Because let's be honest, this job can be a pretty thankless job. There's a reason why when the market's up 25% for 2 years in a row, you're typically not getting calls from clients saying, "Oh my gosh, thank you so much." It's usually when the market's melting down a little bit where you start to hear from clients. So if you can change the tune and change the focal point on that relationship, it makes a big difference.
Well, and I love the line in this because I reread it last night in preps for today because I hadn't read it in a couple years. I love the line in there, which is, you can win the rat race, but you're still a rat.
Yeah.
And I think it's a pretty funny line in the book. And again, appreciate that you gave this to me so many years ago. And I love your view on how you help clients. one of the things I wanted to talk to you about, because you're a young advisor, and I think the industry's changing a lot. It could be AI, it could be fee compression, it could be succession, it could be all the things that people are talking about. Sitting in your seat, owning a firm, you have a long runway. What's one of the things that you're thinking about as a young advisor, that you're trying to prepare yourself for the future?
Yeah. We talked about this as a team a lot. One, I think it's less about fee compression and value expansion. And so we consistently are trying to think of how can we make ourselves more efficient so that way we can service our clients better and we can hopefully service more of them. And so, AI has been a space where it's going to continue to get better and better. And I don't have any fears of the robo-advisor taking over. People, yeah, I mean, people want to talk to people. When a client loses their spouse, they don't want to talk to an 800 number. They don't want to talk to a robot. They want to talk to somebody that they trust and that has built a relationship with them. Now, that doesn't mean that you can avoid all the disruptions that's happening in fintech. And we've been able to implement a lot of those tools to just make us more efficient. How do we do meeting prep more efficiently? How do we do action items more efficiently afterwards? Trading technologies. I mean, Friday was a pretty volatile day, and being able to be way more efficient to make a trade across all of our clients' accounts versus historically, it being a little bit more tedious. So I think it's more about how do you use these tools to just become an even better advisor. In regards to the industry overall, though, we also talk about as a team, we're pretty uniquely positioned here where I'm the old guy at the firm at 37. And I think the average advisor in our industry is close to 60.
Yeah, that's right.
And we're going to go through the largest transfer of wealth in the history of the world. And so, we actually don't have enough qualified young advisors to be able to help with, one, the aging demographic of advisors, and then two, this large transfer of wealth. And you're going to get, potentially beneficiaries inheriting this wealth that have never managed money before.
Mm-hmm.
And
Yep.
so I think for us, like some of it is like we recently signed up for this new tool called Beyond Will, which is a Cincinnati startup, and we're offering it as a value add to our clients for them to make sure their estate planning's in order. But we're also offering it to their kids. And we're doing that because we're trying to make sure we're starting to build that relationship with the beneficiaries. And odds are, if the parents don't have their estate plan buttoned up, their kids probably don't either.
Kids don't either. Yeah, it's a waterfall, as you know.
Yeah, exactly. And so we don't want to just rent assets. We don't want to just have a client for 10 years or 15 years and then they pass away and we don't have a connection with the beneficiaries and then those assets are out the door. We truly want to do multi-generational planning, and I think we're pretty uniquely set up for that because of having 30 plus years potentially in the industry to go for most of our staff. And with this large tsunami of wealth that's going to transfer.
Man, I couldn't agree more. Well, man, you and I could do this all day. I can't thank you enough for joining. This has been a great episode, and I hope you agree to come back in the future.
Yeah, absolutely, Jay. Thanks for having me.
All right, Cory, thanks. Hey, thanks for watching. We'll see you next time on The Deep Dive.